Good morning and welcome to this Monday, October 5th, 2020 edition of Trading Places Live at earningsbeats.com. I'm Tom Bowley, Chief Market Strategist here at Earnings Beats, and I'll be your host for the next 30 minutes featuring everything you need to know as you prepare for the trading day ahead. Well, interesting weekend for sure. I think most everyone was probably keeping an eye on the health of President Trump with the coronavirus. I'm going to talk a little bit about that in terms of the healthcare provided and what that could mean for the stock market, but we'll get into all that in just a bit. I'm going to do things a little different today. I'll go through and still do my daily market recap, and I go through talking technically, something that kind of appeals to me that I'm watching in the market, and that'll be somewhat familiar. I'm going to go through in the news, which is just a few companies that I'm seeing in the news, either after the close from Friday or pre-market this morning. Also, I want to touch on our chart lists and maybe take a look at some of the stocks that have been or that performed well on Friday within our key chart list, and those that didn't perform so well. I'll pull them up on the charts, take a look at them. Then we'll get into the earnings spotlight, and not a whole lot of earnings out this week. So I thought what I would do is look at our strong earnings chart list and just bring up the ones that have the highest scooter scores, because at least that's one signal that Wall Street's expecting some big numbers. Anytime you've got a high scooter score above 99, that tends to show some pretty serious relative strength. There may be some situations in which it's not, the scooter, because it's a mathematical formula, can throw things off a little bit, but generally speaking, if you've got a scooter over 99, you've been a pretty good performer. And if you're doing that heading into earnings season, chances are Wall Street's bracing for a very impressive report. We'll see. Then we'll wrap up with the three you must see, as I always do. Before I get started, though, I do want to just take everybody over to earningsbeats.com. And if you haven't already, please sign up for our free Earnings Beats Digest newsletter. Not only are there great trade ideas in there 3 times a week, Mondays, Wednesdays, and Fridays, but really I view it just as very educational, and it's free. There's no credit card required. You can unsubscribe at any time. It's really just to help you learn a little bit more about Earnings Beats and the way we approach the market. I think it's a great free newsletter. And again, coming out 3 times a week gives you lots of ideas, lots of things to think about. So if you go over to earningsbeats.com, right on our homepage, you'll see name, email address. Just fill that out, hit the subscribe button, and you're good to go. Also, last week, great week for our portfolios. Again, the model, aggressive, and strong AD portfolios really starting to pull away from the S&P 500. And shockingly, and I say shockingly because the aggressive portfolio, which was hit so hard at the beginning of the quarter, sometimes investing, you make bad decisions, and sometimes you just have bad luck. And I really felt like the first 2 weeks of the aggressive portfolio this quarter, we just had bad luck. One of the stocks in there, QDell, was absolutely crushed back at the beginning of the quarter when Abbott Labs came out with their 5-minute $5 coronavirus test. And so it wasn't just QDell, it was any medical diagnostic company that was out there working on COVID-19. They all took big hits. And so the stock and the aggressive portfolio took a big hit. And it's battled back, and it's almost even now with the S&P 500, which is just as impressive as the model and the strong AD, which are crushing the S&P 500 this quarter. You can see the S&P 500. Now, when I talk about this quarter, I'm not talking about calendar quarter. I'm talking about our quarters for our portfolios, which run starting on February 19th, May 19th, August 19th, which was our last announcement of our stocks, and then November 19th. And since August 19th, the S&P 500 is down almost 1%. Our model portfolio is up almost 12%. Our strong AD portfolio up 11%. And our aggressive, which is down 1.45, slightly trailing the S&P 500. Like I said, we were 11 percentage points behind the S&P 500 after the first 2 weeks of this particular quarter. So it's made a huge rebound since then. And actually QDell, the one I mentioned, is in the news this morning. They have their own approval of a test. The stock's up another $10 today. So this could be the day where the aggressive portfolio pulls back ahead of the S&P 500. We'll have to see. And then our income portfolio, which is definitely the worst performer, but it's also the least aggressive. It tends to just try to look for high dividend paying stocks that are showing relative strength. And since inception, it's not been horrible. I mean, it's making money, but it's been less than the S&P 500 due primarily to one bad quarter. This quarter, actually, it is outperforming, though, by about 1.4 percentage points. So pretty good action in all of our portfolios. If you become a member and join, you can go in, not only check out the stocks in each of our portfolios, but we have a chart list with the 10 stocks that make up each one of our portfolios. There are 10 equal weighted stocks in 10 different industry groups. You can download those into your account if you're an extra or pro member at Stock Charts. All of our chart lists, by the way, we have about 10 or 11 of them now. You can download into your account, which is a pretty cool feature. Anyhow, let's move on. We got a lot to talk about. As far as Friday's action, let's get into this daily market recap. We got the Dow Jones Industrial Average down 134 points on Friday. S&P 500 down 32. NASDAQ down 251 points. That was the theme on Friday more than anything else. I mean, when I look at the market, I still feel like overall we're in an uptrend. We're still consolidating off that January high. None of our major indices have broken back out again. So until you get another breakout above that September high, by definition, you're consolidating or you're downtrending, one or the other. I believe we're consolidating. And the reason I say that is that we've moved back up through the moving averages. When you see prices above the moving average, you're in a trending market. When you see prices stay below the moving averages, you're in a trending market. Downtrending, but you're in a trending market. When you see the market start to move up or here below the moving averages, and then you come back up above the moving averages, and then you threaten to go back down or maybe even go back down below the moving averages, that becomes the definition of a trendless market. And I think a lot of technicians, in my opinion, overreact to prices moving below the 50-day moving average. When you consolidate, it happens a lot. And especially when you consolidate after a big move to the upside. NASDAQ, after that huge rally, I don't know, from the low to the high, I don't even know what the percentage was, but I want to say it was probably 90% return in 6 months. When you do that, your 50-day moving average rises very rapidly. And when you start to just sideways consolidate, which is actually a good thing, you want to consolidate, you want to base. The faster and the longer you go up, the harder the fall on the way back down. So I wanted to see the consolidation in September. We had sentiment indicators telling us we were going to consolidate in September, and we consolidated in September. And moving back up above these moving averages, now I think, we're just sideways consolidating. We'll see what happens next. I believe the low is in. I could be wrong, but I think the short term to intermediate term is in. Long term, it was in all the way back when we, bottomed in March. But I would say short term, I believe we've already bottomed. And so if we go back down to this low, I would be a buyer here in September or in October. I've been a buyer. I was a buyer throughout September as we were pulling back. I mean, that's one of the things I was talking to Earnings Beats members about, was being very careful at the beginning of the month because of the sentiment indicators, but then using the weakness to reaccumulate those strong stocks. And so I think we're going to go higher. But could we consolidate? Yeah. If we fail, if today, out of the gate, it looks like we're going to have a strong start. But if, 10 o'clock, 11 o'clock, we go negative, I think it's very possible we just simply consolidate and maybe even retest those recent lows. But overall, I believe the market's going higher, and I think this will create some opportunities for us if we do continue to consolidate. Mid caps, small caps, I mean, everything across the board is consolidating, but we did see positive action, at least on the mid caps and small caps. Small caps were up more than 1% on Friday. So different market that we were looking at on Friday, no doubt. When I get into talking technically in a minute, you'll see that on one of the charts I'm going to show you. Also, one of the changes I made is including not only the sectors that were strong and weak, but also adding on the industry groups, just to take a look at what was hot, what was not on Friday. So real estate off to, had a super day on Friday, up 1.6%, as did most of the defensive groups. Utilities did well. I think consumer staples outperformed consumer discretionary. So that's where the strength was. It was not the growth stocks that we've been, talking about and that we're so high on. Technology, communication services, these were the two weakest groups. You can see technology down 2.5%, and that helps to explain the NASDAQ being down 2%, more than 2%. Mortgage finance actually had a strong day, up more than 4%. Got some overhead resistance still to deal with. I think we're just simply sideways consolidating. We haven't taken out the June high here, which is, if you look at any of the other major indices, we're well above the June high, or at least we cleared the June high. We have not on mortgage finance. So this is a group that still is under a lot of pressure. It got a little bit of a rebound on Friday, as did most of the weak areas of the market. Flipping it though, automobiles, which in my opinion has been the strongest area of the market, on Friday, the weakest industry group, down almost 6%. But technically, I see nothing wrong with this chart. If anything, maybe off of an uptrend, I see rising lows and falling highs. So I think we're squeezing into some sort of a triangle, which normally would resolve itself to the upside in the direction of the prior trend, which is up. So overall, I mean, the market, Friday was not good in terms of the rotation, but it was one day. I wouldn't read too much into that one day. Overall, though, small caps were up, mid caps were up. Nothing horrible in the charts of the other major indices. It wasn't a bad day. It was just a different day in terms of rotation. 10-year Treasury yield. As far as economic reports, we've got the PMI composite. August was 54.6. We're looking for 54.4. I did not see the actual report. ISM services, August was 56.9, looking for 56.3. So both of those reports actually looking to come down just a little bit. I did like the action, though, last week in the 10-year Treasury yield. And when I say we had a good week, the S&P 500 was up. All of our portfolios were up. On Friday, we saw a lot of rotation. A lot of weak groups were up. And you can see last week, money was rotating out of treasuries. Anytime that yield's going up, it means treasury prices are going down. And so when treasury prices are going down, it means they're selling in treasuries. So traders, bond traders get those proceeds. What do they do with them? Well, in a bear market, they go to cash. In a bull market, they go into equities. And that's what we saw last week. Pretty good move to the upside in equities. If we break above 0.75, and that's what I would be watching. If we break above 0.75, there's going to be two things I'm going to be watching. Number one, I believe the money is going to rotate into the equity markets and we're going to go higher. The second one, though, is probably just as important, and that is where do we go? Which areas of the market lead? That's going to be really important in the fourth quarter for me. That's the, as we get further and further along in this virus, at what point does the stock market begin to say, okay, enough is enough with the selling of the cruise lines and the airlines? We can see the light at the end of the tunnel, and we're going to begin to start moving into those areas. I don't see it yet. I mean, we saw it a little bit on Friday, but we've seen it before. We saw it back in June when we had this big move. Money went pouring into airlines and cruise lines and all those. And then when the yield started dropping again, money rotated right back to growth. So we've got to be cognizant of not just whether the 10-year Treasury yield is going up or down, but where does the money go? If it rotates into equities, we've got to watch that rotation closely, because that's going to be the big story of the fourth quarter is which groups lead. Again, I'm very bullish. I think the market goes higher, but I am still on the fence. I'm still certainly leaning toward growth. I believe growth goes higher. I think everything goes up. The question is what leads, and we're going to be finding that out here over the next few weeks. Let's see. In the news today, we had QDell, as I mentioned. They came out with emergency use authorization by the FDA for its ABC test, which is a combo diagnostic for the flu and for COVID. The stock was up $10 I saw last time in pre-market, which would put it up somewhere around 245 area. This is one of our portfolio stocks, and this is the one I was talking about. We got into this stock on August 19th right here. Great AD line. Medical supplies were threatening breaking out. QDell, relative to medical supplies, was in a nice uptrend. And so this was one of our top 10 stocks. And then Abbott Labs came out with their announcement of their test, and all of the medical diagnostic stocks, not named Abbott Labs, got crushed. And this was one of them. QDell went from 200 and, well, when we got in on the 19th, it was probably around 250, went all the way down to 135. It was down probably 45% before it did this. And now with today's open, we're back almost to break even. And probably one of the more controversial things about our portfolios is we treat them as buy and hold for 90 days. And then we trade out of them and we get 10 new stocks. We hold them for 90 days. No stops. We just hold them. And the rationale there is, and what we're looking at, number one, is we want it to be simple. So simplicity is a big part of it. We want to be transparent. We don't want to go back and say, well, we said if it went down below a certain level, we were going to get stopped out. And, intraday, maybe it touched that level. And, did we get out? Did we not go? This is simple. We hold 90 days. So very transparent. And we've had plenty of our leading stocks. A bad story comes out and the stock gets hit only to rally right back up. We saw it last quarter with Enphase. We saw it back during the pandemic with Chipotle. Restaurant stocks got absolutely trounced when the pandemic hit in March. But the leaders, Wingstop and Chipotle, both came roaring back. So we got stopped out a few quarters ago, and it hurt our portfolios by doing that. So essentially what we've done is we've said, okay, we have a combination. These portfolios are really a marriage between trading and buy and hold. Trading in the sense that you don't buy and hold for 10 years. It's only for 90 days. You got leaders for 90 days. After 90 days, you get out and you get the next set, your next batch of leaders. But during the 90 days, there's no trading. That is just what we do in order to be transparent and to track our results and to educate our members and the public about the significance of holding leading stocks. That's the real key here, is you want to be in leading stocks within leading industry groups. And I think the numbers are certainly bearing that out. But QDell, if we had a stop, probably wouldn't have had a stop here. We probably would have got stopped out here when it opened down to 175, and we would not have been involved in this recovery. You might say, well, yeah, but it could have gone to 100. Yeah, it could. I mean, that's the risk. It's not like these portfolios are without risk. They have plenty of risk. It's like anything else, like any other mutual fund or any other stock you own or ETF or whatever. Everything you invest in has risk. We can't eliminate the risk. But we believe 10 leading stocks in 10 industry groups, different industry groups, makes a lot of sense. And certainly the numbers are backing us up on that. But QDell with the news looks like it's going to open higher. We'll see if it continues. REGN, this is another one of our portfolio stocks, Regeneron Pharmaceuticals. You may have heard on Friday, it was announced that President Trump was going to be taking an antibody cocktail which was manufactured by Regeneron Pharmaceuticals. And of course, this could have gone either way. When I saw that on Friday at the close, I was like, okay, well, I said, if it turns out that he has a good weekend and health-wise things are improving, I would think it would be great for the company stock. If it went the other way, it could be devastating for the company stock. But so far, news out of the White House has been pretty positive, and they were talking about President Trump might get released today. And the stock, last time I looked, was up $32 in pre-market. So it was up about $5.97, very close to this 50-day moving average, which is $5.96. And one thing I've noticed, and I've been pointing out to members, and the reason that this stock was in one of our portfolios is that even though it's been going down and didn't really look that great, look at the AD line. AD line's near a high still. It has one solid day on big volume. It's going to break out on its AD line. So even though the stock's been going down, I think there's still plenty of institutions that are willing to buy anyone shares that wants to sell. So I think Regeneron looks pretty good. A couple other stocks in the news. Fortive reported this morning that they see their Q3 revenues above consensus. Last time I looked, the stock was up above that 80 level. Looks like it's breaking out. We'll see. It's got to clear 80 on the closing basis, but FTV, interesting. Neptune, NPTN, or not Neptune, Neophotonics, sorry. NPTN, they see their Q3 revenues and earnings per share higher as well. Now, this stock's been in a downtrend. Accumulation distribution's been horrible. Relative strength versus the semis has been horrible. This actually could be a good sign for the overall group. I mean, if you got some of your weaker stocks starting to raise guidance, That probably is not a bad thing, but we'll see whether or not we can hold a move over the 20-day moving average. Personally, I would look for other stocks in this space. DKNG, DraftKings, one of the hottest stocks in September while the market's been going down. DraftKings has been soaring. This is probably the worst news from a trading perspective. They filed a secondary offering. And when you're if you've traded, you probably know what I'm talking about. I've been in plenty of these before where you got a company and they've been rolling to the upside and they use that to their advantage to raise more capital without having to give up as many shares because the stock price has gone up so much. So many times these stocks break out. You think you got the best stock ever, and then they come out after the bell with a secondary offering. DraftKings, when I looked, was down, I think, a few dollars back to around 60. You know, they've still got to price it. I think you're going to see some selling here in the near term on DraftKings. I'd probably take my money and run. But a move back down, if it were to get back down below 50, I think that 45 to 47, 47 and a half area would be very interesting. And I'm not saying it's definitely going down there. I'm just saying as it gets down there, I think the risk, your reward to risk starts to look a lot better. All right, chart lists. I wanted to get into some of our chart lists. Actually, no, before I do that, I want to talk about this IWF IWD. This is our growth versus value analysis. And this is what I was talking about on Friday. It's a 10-minute, 10-day chart. So this was Friday's action. We were moving nicely up for 9 days, meaning the market was rotating from value to growth. Friday, complete reversal. Maybe it had to do with, President Trump being diagnosed with the coronavirus. Who knows? Maybe it was the jobs report that came out on Friday and was a little weaker than expected. Whatever it was, there was a mass exodus for 1 day away from growth and into value. We'll see what happens today. But this is one of the things I'm watching. I just, longer term, here was that move on Friday, but look at the long term. Money's been rotating into growth. So I'm not going to read too much into 1 day. I mean, if you go back, we've had so many steep drops where money rotates, but then it ends up coming right back. We're going into earnings season. I wouldn't read too much into that. All right, let's take a look at the chart list now. So we do a number of chart lists at Earnings Beats for our members. They can download them into their account. We do a lot of the research we do all the research and put them in to these chart lists. So I'm going to start with our strong earnings chart list. The best stock on Friday from our strong earnings chart list was GDOT. Green Dot Corp, it's a financial, actually made a breakout. AD line turned up. You can see on a relative basis, it broke out versus Consumer Finance Group. Volume was strong. Outside of a short-term pullback, I think this one looks pretty good. The worst performer in our strong earnings chart list was Michael's Companies. I still think this stock looks okay. And I also mentioned that it's on our short squeeze chart list. So there's a lot of shorts on this stock. Now, normally, there's only probably, a handful, maybe 5 to 10 stocks on our short squeeze chart list that I would be interested in at any given point in time. Because most of the stocks on that short squeeze chart list are being shorted for a very good reason. Now, Michael's has been an uptrend. I would watch the 50-day. I think you got to keep a stop in play probably either at that or at the price support level. You can see the big resistance here back in June. Came back down, tested that level. You've got that down around 880, 875, something like that. You've got the 50-day moving average at 936. With a short squeeze stock, these can be very volatile. I think you got to give them a little bit of room to the downside, but I'd be looking for a lot to the upside. I mean, in a short squeeze, many of these stocks go very rapidly to the upside, and that's what we saw with Michael's back at the end of August when it broke out. Stock went from 8 3/4 up to about 11.5 in 2 weeks or less. So you can get a really good move on these stocks. So anyway, Michael's was down on Friday. I'm okay with that one. I would prefer ones that are in uptrends right now because I think those are the ones where we're getting a lot of shorts that are having to cover. And just to give you an example of one, and I mentioned this the day it came out with earnings when it was at 29. Look at Jinko Solar. You see where right here was earnings. It broke out above that, and it was heavily shorted. And look at what has happened since then. Stock's up almost 50% in 8 trading days. That's what we call a short squeeze, and that's why these are so powerful. Let's keep moving on. How about our short squeeze chart list? I own this one. and I know a number of members do because I've gotten emails. But Bed Bath & Beyond came out with their earnings. Going into earnings, I was not in it. I actually, when I saw the earnings and it came out, I bought it because with the gap up and all the shorts there, this stock has 61% of its float short. That's a lot of people rushing for the exits. And so we saw a big move up on over 80 million shares on Thursday. Friday, the stock was up almost 10% on over 30 million shares. It was gapping up this morning. Last time I looked, I think it was back up above 21, maybe 21 and a quarter or something like that. But this is a stock that I think could be in a very nice uptrend for a while. We'll see. But it's risky. Anytime you play these short squeezes, you know, if you're somebody who can't sleep at night, if your stock might go down 10%, don't touch this stock. I can't, you know, there's no guarantees. I'm just saying that this one has the conditions present that could drive this stock a lot higher, but you got to keep your stop in play. My stop is going to be at that low that was set back on Thursday. I don't want to hold this thing if it turns back around because maybe we got hedge funds that are digging their heels in. I don't know. I don't take any chances with these short squeeze stocks to the downside. Sometimes I get stopped out early, but I don't want to take that huge risk. But as long as it keeps going up, I'll just ride. I'll just ride, you know, head higher, hopefully, with it. The worst performer in the short squeeze is BE, which is Bloom Energy. It pulled back, but it actually has pretty nice. I think this is one I mentioned to members recently as being one to watch on this list. If it breaks out above 19, this thing could really go. And you could see back when it made some prior breakouts and made this huge run. Look at the volume back in July. Now it's been consolidating. I think rising lows are bullish, but we got to get that breakout above 19. Strong future earnings chart list. So these are stocks that are not on, well, I shouldn't say that because I just updated the strong earnings chart list. There may be a couple that are on both right now. I've got to, I still have to update the strong future earnings for those of you that are members at Earnings Beats. But the strong future earnings that we have right now, the best performer is LAD, which is Lithia Motors from Friday. Big move up. And you can see getting close to a breakout level. If it breaks out, that'd be very bullish. AD line looks strong. Look at the volume coming in to support it. It's a specialty retailer. Specialty retailers relative to the S&P 500 just set a new 52-week high last week. So on a relative basis, it's in a good group and it's a leading stock. That's not a bad combination. So if we get that breakout, I wouldn't be surprised to see it go further. Strong future earnings, one weakest was BE, which we already looked at, so I won't take a look at that one. Tesla was the other one, though, and it's pulled back. I think it's consolidating. As I mentioned, I think we're in some sort of a triangle. Or you could kind of look at this as equal highs at 450, rising lows. I think Tesla is going to go higher. I think Tesla is anointed as one of the top stocks in the market for a reason. And usually we can't see those reasons when it's happening. It happened for years with Amazon. But Tesla, I think, is a stock that goes higher, just my opinion. Strong AD chart list. Best performer on Friday was PACB. Pacific Biosciences. Wow, look at this chart. I wouldn't be jumping in. I don't know what their short interest is, but I tell you, this certainly looks like a short squeeze to me. Who knows? Have to look to see what that short float is. Worst performer, Tesla and Michaels. We already looked at both those charts, so I'm not going to pull them up again. Weak AD chart list. So these are stocks that didn't do very well during the pandemic. He's H&E Equipment Services, best performer. Got a lot of tops up here near 22. Volume, not bad the last week or so as it made this move up close to 22. Can we get that breakout? That would be bullish for the stock. Worst performer, AZUL. And AZUL, yeah, it still, to me, doesn't look very good. I mean, it's been pulling back here since that mid-September high. Still well off that June high. This is kind of the poster child for the bad stocks that we saw during the pandemic. Had a huge run from mid-May to June 8th. Other than that, I mean, it just really hasn't done much considering the market's, gone up as much as it has. So not a big fan of this one. Raised guidance chart list. Foot Locker, best performer on Friday. Still needs to get up and close above 37. It did go above that June high. I think things are improving here. A lot of stocks out there I think are better, but this one is at least improving. A breakout above 37 would be bullish. And the worst performer was Dexcom. This is one that's really struggled since reaching that high. But I just want to point out, as it's continued to pull back in September, AD line is broken out to a new high. Somebody's buying this stock while everyone else is selling. Look at all those hollow candles. I'm not ready to give up on this stock just yet. Watch that support area around 380. Let's see if it holds it. If it doesn't, I think you're going to have some really good support at 340. But ultimately, I believe we're going to reverse on Dexcom. I think the stock goes back up through the highs. All right, earnings spotlight. Let's take a look at Penn National. And what I did, again, is I wanted to pull up the top scooters in the strong earnings chart list, because I think this is a sign Wall Street's expecting some good numbers. Penn National, big move up, AD line breaking out. Look at the relative strength versus the gambling index. Penn National strong, very good volume trends. Obviously, Wall Street's expecting something big here. Novavax in that biotech space. Now, this is one that shows a really strong scooter, still up above 99, but really has struggled for the last 2 months. Stock was up, it's probably down 40%. So do I think this is the best one out there? No, but I would not be surprised to see something good come out of this company, just because whenever it consolidates, any period it's gone through consolidation in 2020, it comes back with more good news and takes off. So don't be surprised to see this one make that move back up above 120, 125, get above that 50, and then it could run again. Another one that shows that AD line pretty strong, even though it's been selling off for a while. Still buyers. There's still plenty of buyers out there for the stock. Etsy, this is one of our portfolio stocks. And Etsy, nice push up. AD line trying to break out. Specialized consumer services trying to break out. And Etsy's been one of the stronger performers in the group, so I like this one still. Fastly, FSLY, another portfolio stock, has been strengthening. It looks like it's breaking above. I'd like to see it close over 100, but it certainly appears to be trying to make this move up and trend higher. AD line remains very strong here on this one. Last one is Zoom. Zoom gapped up a little bit at the open today, only up about $5 right now, but continues to be strong. AD line strong. Volume trends are strong. Relative strength is strong. This clearly is still one of the leaders in the market. So I still like Zoom, and Zoom is in one of our portfolios. All right, finally, let's wrap up with the three you must see. I'm going to start off with a couple oil stocks. Parsley Energy. Actually, the beautiful reversing candle right there. I love that bullish engulfing candle. The stock did gap up a little bit. 20-day has been a problem. We'll see if it gets through. If it gets through, I think it's going to run for about 10.5. So Parsley, this isn't my kind of style. I will not be buying this stock. I just want to be clear. I'm just telling you based on the chart, based on what I'm seeing, I wouldn't be surprised. Parsley actually has a pretty strong AD compared to many in the oil and in that energy area. So this one wouldn't surprise me to see a move back up to about 10.5. OVV. This is Ovintiv. Another, look at that reversing candle. That's called a piercing candle off of a downtrend. Not surprised by the gap up. I was looking for maybe a move to the 20-day. This AD line not nearly as strong. Stock already up 7% though. So when you see a reversing candle like this, the best time to get in is the close, because a lot of times when it gets a reversal, market makers are already in. They've already bought. That's what causes the reversing candle. So many times you do see these gap ups. I would not wait. I wouldn't look at this candle and say, oh, it's a reversing candle. Yes, we gapped up. Now I'm going to buy. I would be buying on that reversing candle, looking for that gap up. Big difference. AVNT, last of the three you must see. This is Avient Corp. Broke out above these recent highs. I tell you, this stock on a close above 30 looks really strong to me. If it can clear that June high, volume was picking up the end of last week. AD line's not bad. I mean, we were just near multi-month high earlier in September. And so now we're making this breakout. Relative strength starting to pick up versus the commodity chemicals. Again, not my favorite stock, but things certainly looking better. Let's get a quick update on the market and we'll wrap up the show. We've got right now the NASDAQ is up 106 points, S&P up 30, Dow up 250. On a percentage basis, they're all looking about the same. Small caps, mid caps, though, doing a little bit better. So we may still see that relative that relative shift, if you will, the rotation shift, may still be in play here today. We'll have to watch. Regeneron, you can see, as we talked about earlier in the show, currently up $35 to 600, up 6%, top performer in the S&P 500 right now. All right, that is it for me today. Everybody have a great Monday. We'll be back tomorrow over at Stock Charts for a recorded version of Trading Places Live. Everybody have a great day. Happy trading.